Hello and welcome to the first episode of Macro Mondays, powered by eccuity.com. I'm Charlie Meaden, the founder of eccuity, and we thought we'd be making a podcast about macro. As an investor, it's really hard to keep up with all the things that are going on in the world when it comes to macro. For us, we think it's important to understand what is going on around the globe and here in New Zealand. So we thought every Mondays we'd do a segment on macro to keep everyone up to date. So each week we thought it'd be a great idea just to go through some different topics and kind of discuss them and just think about how this will impact us potentially in the future. So really just a thought experiment. In the future, we'll also have guests and others on the podcast to give different views around what's going on in terms of macro and what's going on around the globe. Inflation coming down as economies slow. That's something that was heard very much so last week. So everyone really wants interest rates to come down, and everyone's been really hoping for that for quite some time, because when interest rates went up, it became much more difficult for households and businesses to stay afloat, especially with the high debt levels that we have these days. So now that we're starting to see inflation coming down and the economy slowing, there's a lot of excitement and enthusiasm and optimism around the fact that central banks will be able to lower rates. So that's seemingly a great thing, and people are quite excited about it, and now markets are reacting to it. What we definitely are seeing is that economies are slowing, and for that reason, inflation is coming down. Given all of the money printing that happened through COVID, it just took a long time for us to deal with some of these inflationary issues. Ultimately, I think it's a good thing. Obviously, we've been wanting inflation to come down. We've been needing inflation to come down. How long do economies stay slow for? The thing is that these are lagging indicators in a sense, It takes a long time for inflation to emerge, and then it takes a long time for you to really understand if what you're doing to fight inflation has worked or if it's worked too much. So central banks around the world are starting to cut interest rates. We saw Canada do it. We will most likely see the US do it. The US is actually pricing in 2 rate cuts this year. And in terms of New Zealand, we were expecting rate cuts next year. However, there's some speculation now that it might happen before the end of 2024. It could be the case, given that the New Zealand economy is slowing very quickly. You see all sorts of consequences of that. So providing that core inflation comes down, which it looks like it's coming down rapidly, we will likely see interest rates coming down. In terms of the New Zealand house price index, we are well off of our 2021, 2022 highs. There has been a significant retracing in the price of houses in New Zealand, and that's been driven by higher interest rates and just a lack of liquidity given the stricter borrowing requirements that the banks have put on. The New Zealand housing market has had an incredible run and been almost an unstoppable force for the last 20 years at least. It's become extremely unaffordable for people in New Zealand to buy houses. And as you can't have a 30-year fixed mortgage, no one in New Zealand was able to stay on low interest rates. Whereas in the US, they have 30-year mortgages, which means that they're able to stay on low interest rates, which actually does create some other issues for them in their housing market, because it means that people aren't selling because they don't need to, because they have this asset which is like a 2% mortgage. They have the benefit of lower interest rates on their mortgage for longer. However, because they're not going to then sell, there's a distortion and less price discovery in the US in this example. New Zealand, despite it being really slow here and it feeling like a bit of a drag, I think, it seems to me that the situation and the struggles that New Zealand are facing right now are at least in line with what you would expect from a fundamental perspective. Whereas some of the stuff that's going on abroad is very hard to work out what's real and what's potentially data that's not quite working, or there's some issues with the data. So I think that's something to be positive about. I mean, at least we're in a country where things seem to be relatively level-headed and trustworthy when it comes to data. So house prices have come down. It's to be expected given higher interest rates and the fact that people are not in as good a situation as they were a couple of years ago. We will see if this actually becomes an opportunity to actually realign the house prices in New Zealand to make them more affordable for first-time home buyers. My sense is that it would have to come down quite a bit more for that. And given the amazing run New Zealand housing market has had, I wonder if it's going to have those same level of returns into the future. Wage growth. This is something that's really interesting when we think about macro, like how much were people earning? How much was it increasing? And then is it now all of a sudden coming down? And that's what we're seeing right now. We are seeing wages drop quickly. The 3-month moving average of median wage growth is just plummeting. This is in the US, but we have data to suggest that it happened in New Zealand as well. For example, the developer community, the amount of wages that they were able to obtain just a couple years ago has plummeted, in some cases halved. So we're really seeing a crack in the labor market, and it seems like employers have the upper hand once again, where employers are clearly not willing to pay these higher wage prices. And that makes sense given down some of the slowing we've seen. So again, this is kind of a part of the washout. We would like to see a stable wage growth here. It seems like it's mean reverted, and we'll probably see a steady rise once this slowdown has kind of ended. So at the moment, businesses are slowing down, making adjustments to their cost structure, and we're seeing that that's having an impact on the amount of wages that people can get hourly. I think the New Zealand dollar is a really interesting topic. It's something that I think about quite regularly because we have to buy so much in US dollars. The US dollar is the global reserve currency of the world. And over the last 5 years, the New Zealand dollar hasn't done very well. Given that the New Zealand economy is really slow right now and that we are likely to cut rates before the US at this rate, I don't expect that. It seems that the strength of the New Zealand dollar could face some headwinds in the future, especially if we are to lower rates sooner than the US. So it's always really important to think about the New Zealand dollar because you're buying your Netflix in US dollars. Most online services that you consume are from the US. So it's just something that's really important. And of course, so many people hold so many assets in US dollars. Think the S&P 500, think KiwiSaver funds that have high amounts of exposure to US dollars. Think about your individual stock portfolios. New Zealand is highly exposed to the US dollar, and it's always something that everyone should consider on a regular basis. It makes sense to have some USD, some US dollar exposure because we rely on it so much. And at different points in time, the New Zealand dollar will be stronger or weaker against the US dollar. And now with the Magnificent Seven and the S&P 500 and other US passive indexes being such a large part of KiwiSavers and other managed funds, it's definitely something to consider. We are exposed to US dollars even if we don't want to be. I can't believe this, but today we have seen an assassination or attempt on Donald Trump. This most likely becomes a huge meme. We're seeing like 50 Cent theme tunes to Donald Trump now. This is going to go extremely viral and most likely going to be a massive tailwind. It's going to be a huge tailwind in his campaign. This, among other things like the debate, are going to further empower his campaign and most likely will result in a win. That has some significant macro impacts that we'll be watching. If Donald Trump gets into power, he will most likely cut taxes and keep corporate taxes low. That may have some consequences. To get that done, he may need to cut government spending, which would be a similar situation to what New Zealand has dealt with over the last 6 to 12 months. Among other things, he'll also be looking at tariffs. So those tariffs will also be or could be inflationary. So it's going to be really interesting to see how this campaign unfolds. It feels very much like Hollywood is directing this campaign. It's often better to not get too excited by all of these things that are going on just because they're distracting. But they're interesting to monitor because it does impact everything around the world. So it's good to keep an eye on what's going on and just at least be aware of what's happening. So on this and on that very light note of an assassination attempt, you can really see from a macro perspective, like you can see when presidents are being assassinated or attempting to be assassinated, those are generally times where things are unsettled and there's a lot of conflict between people. This often happens at the back end of things like pandemics and wars. So it is to be expected that these things could arise. It's our job to navigate through and just know what's going on so we aren't rudely shocked and just monitor. Macro is a really complex thing. As we can see, we dealt with a bunch of different topics today. It's really interesting to go through what's going on in the world. Don't dwell on it too much. It's just important to note. It's interesting to understand from the awareness that you can gain from understanding what's going on in the world. It can better prepare you when managing your own portfolios. We look forward to continuing to do Macro Mondays, and in the future we'll be running guests, getting other content and doing other comparisons as we navigate the world of investing and building wealth and everything that has to do with macro here on Macro Mondays. So we'll see you next time.